What is going on, everybody? In this video, we are giving a state of the market and stock picks for July 28th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenomenal market in which we are in. And you may be saying, well, hey, you just said that the market is going to go down or 100-point basis move. Possible, but this is what's going on. This is the current state of the market. There is a lot of stuff that is blatantly obvious. It is really bad. But being said, the market is in earnings mode. When the market is in earnings mode and we're hitting expectations in a really shitty environment, the market will rally. Again, it's not the economy. The market, again, by design, will continue to try to push up unless it sees otherwise. But there's a lot that's been unfolding today. Meta had earnings after hours and it got absolutely destroyed. And what we found out is that Powell is going to have another 75-point basis move. Very historic, 275 back-to-backs. Didn't have the 100. I think if we would have went 100, it would have pretty much went full panic mode at that point. But again, expectations were 75. Again, that is extremely bad. It doesn't matter if the market is rallying. That is extremely, extremely bad. We are seeing the repercussions of these rate races at an extremely fast pace. And these rate raises continue to happen at this fast pace. We are going to essentially cripple the economy, right? And that's what's happening. We start getting deflation and stagflation because people are afraid to buy. People are losing jobs. People can't make any money. You got headline inflation, so your energy and food are just flying through the roof because people are just trying to afford the basic necessities. And so to entertain themselves, they will, right? The easiest form of entertainment is to eat. That's how a lot of us grew up. And that's essentially what we are taught. To have good times, you normally have food or beverage with your friends and just celebrate those times and those moments. And essentially food is tied with that. So with all that being said, the money is being soaked into that and understanding that, again, fuel prices are wreaking havoc on all farmers. If you haven't seen the videos that are out there, there's tons of videos. There's tons of articles about food shortages, energy potential shortages as well came out today. But going back to Powell, 75-point basis move, he also said that we will be going meeting by meeting basis, not providing any kind of clear guidance beforehand. And so this is something you need to be worried about. Now, what the focus is we got Apple and we got Amazon next. That will be extremely important. If they show cracks like everything else, it's going to be concerning. And then the biggest thing we have to pay attention to here is that the next core CPI, if it comes over 9.1, we're in trouble because that means the Fed will continue to do potentially another 75-point basis move. Until the Fed actually sees numbers come down, they will not let off the gas. And again, something I've always talked about, the tool that they have is not going to stop gas prices from coming down at $100 a barrel. Or roughly, gas is sitting at $98 a barrel. And the dollar, let's see, where's the dollar? I can't even see my dollar on here. The dollar is at 106. So the dollar is pretty stabilized around that 106, 107 mark. And it's really going to wreak havoc. Again, the 75 points, yes, it wasn't 100, but it's still 75 points. That's one thing to consider, right? And so you may be asking, well, who's buying, right? We are in earnings mode. Again, if things hit expectations, we needed some sort of hope, right? Even if it's, hey, we hit expectations, at least we're kind of on par here. So let's go ahead and run it up for earnings because that's what our normal cycle is. Normally, if the state of the market is hitting expectations during an earnings cycle, you'll kind of have this kind of push up, even though things right now are like really, really bad. that doesn't matter. We need to let this earnings cycle play out. Maybe we push up. Now we can start looking at technicals. I'm talking about a lot of the different things, the sentiment of the market right now with everything going on. And then you still got Russia toying with shutting off EU. Again, there's a lot of really bad things going on. There's a lot of things dialing back. Facebook said that they are cutting as well. So now you have all your big corporations saying they're going to cut, and you have Apple and Amazon yet to come on deck tomorrow after close. You'll get their earnings, and then we'll see. So there's all that. I try to keep it basic and understand that, yes, you have to still understand that 75-point basis move is absurd. 2 back-to-back 75-point basis moves. And if I'm not mistaken, that's the first time that's ever happened, right? Now, it's not saying that rates haven't continued to surpass what they've currently had, but you have to understand that doing it back-to-back is a big issue. Now, looking at Q3, Q3 is going to look really bad, I think, as far as earnings go. I thought we could have potentially cleared it up if we would have dialed back maybe 50, maybe 25. It's still going to have a lot of impact on the market, but 75 is big. And we're going to see that in Q3 earnings. So we got a whole other quarter to get through. We got to finish the earnings. The market's going to sell off the next 3 to 4 weeks, and then we'll go back into earnings mode and see how nasty it really gets. But with that being said, again, it still matters on that core CPI, the headline CPI. Really, we don't care about core so much anymore. I know the Fed says they go off of the core, but again, if your food and energy are through the roof, right, you're not going to be able to do anything. Yes, the interest rates may be helping with other aspects, but you have to understand in doing so, it's a double-edged sword, right? Like, people aren't going to be spending money. And we're seeing that in earnings. It's just people are using credit cards, and credit cards are just raking in the money because people are putting a lot of stuff on credit. And then you have everything else skyrocketing with food and energy because the people have nowhere to go. So they just stay home. And so they consume more energy, they consume more food. And again, with gas prices so high, again, the farmers are struggling to break even, essentially, right? Because the gas prices are just way too high. And feeding cattle and all that stuff takes gas, right? There is no electric vehicles out there. There's very few. I don't even know what the ratio is for that. That'd be actually pretty interesting to find out as far as farmlands and how much gas they're consuming and the cost of fuel in the farming sector right now. So it'd be interesting to see that. But nonetheless, again, I'm not an oil guy. But right now, we're really dealing with a lot of issues with oil and its impact on food and energy currently right now. So that's why you're seeing the shift. So the Fed may be saying, oh, well, it's fine, right? But it's not fine because they can't control the food and they can't control energy because of, again, the stranglehold that Putin has on the gas in the EU and where it's at. And we're tapping into oil reserves. And the oil reserves we're getting back. Again, shout out to my boy, CNFT me, please. We do a Tuesday tag team crypto on Twitter Spaces, and we talk about a lot of stuff. And he came on and talked about the oil reserves and essentially how the secondary oil they get back to replace the oil is nowhere near what it was, and so that's concerning. If we do have some cataclysmic issue, it's going to wreak havoc and going to just cause a massive spiral down. But again, the market moves on expectations right now. Again, there's nothing new. None of this is like surprising. So that's why you're not getting like a flash. If it would have been a 100-point basis move, you probably would have got a drop and a crash. Again, you need overnight digestion because this is really bad. 75-point base move is really bad. And so you need overnight digestion, let people understand what's really going on here. Okay, well, more and more, right? The housing and everything is already starting to slow down. The people are cutting back. It's only going to get worse in Q3, right? And we got, I think we got another month. I think we got a while before we get another Fed meeting. So we have to definitely see how that plays out. Something I got to look at for coming up. But yeah, so people are going to be more reliant on data moving forward and how sensitive that could potentially be. So let's see. Daily, this is something I've been watching. You're coming into some major support here on the 20 EMA. We'll look at some higher time frames here. Now we broke the 20 EMA, the 50 EMA, came all the way down, tested the 200, and we bounced. A solid bounce off the 200. Again, higher time frames, you're going to get bigger bounces. This is the thing. We haven't retested this 20 EMA. We haven't touched it. We've come close. We haven't touched it. We're going to officially touch it here roughly around the 4060. I've been waiting for the market. I thought we would have touched 4060 up here when we essentially rocketed it out of here, but we didn't. It took another weekly candle to get us up there, but we're going to get a hard rejection off this. And so however that plays out, digestion, whatever, 460, you'll get a really hard rejection, and then you could potentially come back down to the 50, which is sitting at 39.48. Then at that point, we'll see if it breaks, starts selling off, if the digestion is enough. Again, if Apple and Amazon do bad, you probably see this a lot sooner than what can happen. So tomorrow we could potentially push up to 4060. It's kind of what I'm looking at. Again, you can't just fall off the cliff, right? Like you're going to have bounces, especially in these higher time frames. We got a bounce off the 200. It wasn't the greatest. It wasn't the cleanest, but we got it. Now you're getting that first retest of the 20 on the weekly. You have to also understand you're coming right into the monthly too. Look at the monthly. We had the first initial break. This month was absolutely crazy. Then we had the first initial break. This is the first initial retest, 4073. Again, there's another monthly 20. You're going to get a retest, and then you're going to drop down, right? Potentially down to 36.35, 36.36, where we talked about roughly was that 100-point basis move. Then you're probably going to need some sort of major catalyst. Maybe we get the shock of we are in recession and things are really getting bad. Another month might get that core CPI, might do that. If it's over 9.1, could potentially break that. Or we're officially in recession and start selling down here. Again, now when you start getting higher time frames, you're not going to touch. If we touch this 200 in the higher time frames, there's got to be some really like left field, like black swan event to be touching these 200 in the higher time frame. So we could potentially just come down, and that would be it. And then get one retest, rejection, and then back up and reverse. It's kind of what I'm thinking. But you still have to be very careful on the market sentiment. There's a really dark black cloud. Everything is highlighted what's going on right now. There's nothing good about what's happening. So again, these viruses, they continue to pump out 50, 75. It's going to do a lot of damage. It's going to cripple these companies. And then people are going to be laying off. No one's going to be hiring. No one's going to be buying. In any economy, supply and demand is the way it works. In any transaction, supply and demand. If there's no demand, you can't sell supply. So that's where we're coming into. That is deflation and going into stagflation, right? And so that's what's going to be a concern. Now, to avoid stagflation or have the good deflation, right? The demand has to come back. And how quick will that demand recover, right? And this is where you start getting a recession. How quick will that demand come back? If that demand does not come back, right, if it's prolonged, then you start getting a depression. And we're not looking at just in the U.S. We're looking at global recession, global depression potentially. Again, if the inflation, what's currently going on, again, it's not a very fast thing. The black cloud I'm talking about is not fast. Even the crashes we had during recessions haven't been fast. They've been slow. They've been these nasty grinding drops like this that we've had essentially all year. So that's what we're watching going forward. But that's what I got on the SPX. I jump over to Bitcoin, higher time frame, right? It's still got some room. It could jump all the way up here to the 27. It's something I've been talking about. It could retest the 27, right? You got a nice bounce off the 200. After you realize this is higher time frames, you're going to get bigger bounces, and then you potentially start selling off again. That's the way I look at it. Now, again, oil sitting at 98. I don't expect that to be coming down anytime soon unless something happens. with Putin, starts shutting stuff off. Again, the reserves nothing is looking good on the oil side. You don't see this, and they're not going to advertise this and tell you what it is because of that fact that there's more behind the scenes than what you're actually seeing. And let's take a look at Tesla. Tesla, this is a monthly candle, so this is interesting. Can Tesla hold essentially that 771? This is the ultimate question. Are we going to wick back below this? We still have another couple days. If we start really selling heavy, like I showed on the SPX, we could get rejected pretty hard. We might have a nice pop tomorrow. That puts us right into, or maybe we may actually just gap down. It really just depends. If Apple and Amazon do bad, this could wick right back down, and then we could potentially keep selling off. Again, this first break, it didn't even break very far, and it tried to retest. Again, if this wicks down, you're going to definitely see this back down here at the 530. Strong possibility. Nothing is guaranteed, but a strong possibility. So really watching that with Tesla and seeing how this plays out. Again, we had the nice bounce here. If it can't, again, hold above the 227 tomorrow, this thing is going to start coming down. Back down to these levels. Again, you're going to need more of a catalyst for this thing to just sell off. Again, after earnings, you get a couple of good days of run, and then after that, you're going to start getting like a die down period. Like for 3 to 4 weeks, you're just going to get some slow sell-offs. You'll probably get some big drops and some slow sell-offs, essentially preparation for the next cycle. That's normally the way this works. But if for some reason the market wants to rally, if it can hold above that, it could really start getting some gas. Maybe the market just starts rallying just in general for no apparent reason, just because we hit expectations, and just because we potentially won't have the Fed for another 2 months almost, which I believe is the case. I don't think they have another meeting next month, but the month after that. So we got to see, and then you have to understand there's very few. I think we only got like, I have to look. I want to say there's only like 2 more Fed meetings potentially for the rest of the year. I have to look. I don't know for sure. I don't know off the top of my head. So again, they're more spaced out. So we have to see again. So there is very generic information today. So it's definitely a wait and see what happens and play the nasty chop. Now going into tomorrow, shop, really bad day. It looks like complete junk, and somehow it managed to push up. If it can, if it does break the 34 tomorrow, this thing could start selling again. I think the market could potentially rally. Even shop, I think, could potentially get up to 40, possibly, before we hit that hard ceiling on the general index, and then just start selling again. But again, I think if we can get some momentum with Apple and Amazon, we could get a nice little pop. Again, it's not going to stop right at that line at that 40-60 on the SPX. It could, it could shoot right up over that and then wick all the way back down. When you're looking at those higher time frames, that's the way it plays out. So it takes longer to play out, but it's not a complete break. You need a candle to open above on those higher time frames to solidify your conviction, and that's in the direction change. So it's too early to tell. There's, again, too much of a black cloud right now. Again, none of it's left field, and that's the big thing too, is none of this is, as long as it hits expectations. Left field, if you start coming with too much left field stuff, is where you start to get panic. So we'll have to see. And then if you officially have a recession, you could really start panicking people at that point. That's why they've been very delicate about what they say and keep saying that we're going to avoid it, we're going to avoid it, we're going to avoid it. That's not what things are showing. Whether rate increases at a rapid pace will definitely fix all that quickly. So shop, we'll have to see. It obviously did not do well. Of course, it's been doing that and still going up mostly. But Amazon will be interesting to see how they do. I mean, if they tank, they'll pull down the market. Amazon, I'm not really playing. I just want to see how this plays out tomorrow night. Again, got some room up to the 125. So something to watch too tomorrow. Like if it has earnings, it gets stuck around 125. That's going to push the market. What I've been talking about. Then we could just start dumping at that point. And normally after big tech, the market really doesn't care. The market will start selling if there's bad news. And right now we have a bad taste in the mouth because of what's going on with the rate increases. So we could hit that point and then just roll over and start selling. just because of potential fears. But you're not going to hear about recession anytime soon because we don't want panic, even though all the numbers, all the data is pointing that way. We have to see. So with that being said, let's go to BA real quick. Look at all these. BA, again, this is why you can't do breakouts this year. It attempted a breakout and just absolutely nothing. Then picked right back up to the high of essentially roughly 163 and then sold off again. So I'm kind of looking for this pattern, and a lot of the big techs that have already essentially came out, your Teslas and Googles and all them. I'm expecting them to do a push up to the high and then rolling over and just dying back off is what I'm kind of expecting, unless we get a lot of really good earnings coming up and no more bad news about oil. And again, any situation with that, all you need is one news article and this thing will flip and just start selling again. So that's what you have to be very careful of. And if you are DCA in whatever you're doing, it's always good to be running your stop right up against these things to protect, because if this thing does flip and start selling, it's going to definitely go a lot lower, and tag yourself out and take profit what you can as opposed to just holding and then not knowing. But that's again not financial advice, and we'll see what happens. Anything's possible. We could start pushing back up, get really good news and continued good news, and continue to run. It's always a possibility. So CMG, point this out today, had absolutely crazy earnings, massive pop. So I'm really looking for day two on this. As long as it can hold this 1471 tomorrow, looking for a nice pop. Hopefully you can retest to get this 20 EMA up around here would be great. Get a little retest like right here and pop, then can potentially get a nice run up to the 1580. Maybe even 1600 tomorrow. So normally second day runs, especially if the general market sentiment is positive, this thing could really start ripping. So I do want to watch CMG tomorrow and see what they do. Banks, they're holding. That's all you can pretty much say about that. JPM is just holding. And it hasn't really done anything. It's consolidating a lot. Hopefully that means it breaks out and not starts gapping down. So we definitely have to keep that on watch. GS needs to break this 333. If it can't break this, it could potentially start heading back down again. BAC, again, same thing, a lot of consolidation here. Could be a big rip. Again, not expecting everything to reverse here. There's just too much uncertainty. Again, big corporations aren't going to put money in uncertainty unless they know what's going to happen in the next 6 months. Which we have a bit of a gap, right, between the next meeting. I think it is. I don't think it's next month in August, but I think in September is the next meeting. And if that's the case, we might just run because we have some free space between the next Fed meeting. So we might get a little bit of a rally here. That's something to consider, even though Q3 is bad. So the current quarter we're in is already getting bad. It's going to get worse. But again, the market will run and then pretend like nothing has happened until you get a report saying, oh, there's more layoffs. Nobody's buying houses. There's no demand, right? It doesn't care about we're going to get a surplus of demand and a surplus of supply and no demand. And that's the problem. This is where we start getting deflation. Stagflation comes in because nobody wants to buy because they don't know what's going on. They can't afford anything. You're already seeing beginning signs of that. So, but with all that said, again, these things play out slowly. They're not quick. Obviously, you're seeing that. You're just starting to see some of these big corporations taking action only because they're all of their forward guidance is bad. They're expecting a lot worse. And again, this is pure momentum that has nothing to do with what's actually going on. This is why the stock market doesn't follow that economy is close. So, but with that being said, I've already talked quite a bit in this video. These videos have been getting long just because there's a lot of information coming out. But nonetheless, if you made it this far, I appreciate you. Go ahead and drop a like button and pat yourself on the back. Till next time, I'll see you guys later.